The most common question I get in my TikTok DMs is, hey Humphrey, where do I invest $1,000? Or how do I invest $1,000? So if you're here watching this video, you have $1,000 to invest, let's talk about it, because I think there are two types of people or two types of situations that we can talk about where if you have $1,000, what to do with that investment. So without further ado, let's talk about the two situations that are frequently encountered and what to do with $1,000 for each situation. In the first situation, you have $1,000 to invest and that's it. Like, that's all the money you have. You don't have any more money coming down the pipeline. The second type of person is the person who has $1,000 to invest but will continually add income to that investment pile so that they can invest even more further. In the first situation where you have only $1,000 to invest and that's it, you could buy stock, but the problem with stock is that even if you bought, like, let's say 3 shares of Apple, even if that went up 20% in a year, which is already pretty good, at the end of the year you would have 20% times 1,000, so $200 in gains, so a total of $1,200 at the end of the year. While that's really nice, $1,200 is not going to change your life in the way that you want it to. I'm going to assume if you only have $1,000 to invest that your income is not super high. So really, if you only have $1,000 to work with, your real problem here is an income problem. You want to make sure that you can actually create income and create more wealth in the future so that you can invest in things like the stock market. If you can make more income, then you can start to qualify for that second type of situation, which is you have $1,000 and you have more coming down the pipeline. The way that you can build a bigger income is by gaining knowledge. Once you have more knowledge, you can trade this knowledge into for a skill. Once you have a skill, you can trade that in the marketplace and you can get more money for your time. So as cheesy as it sounds, I would take the $1,000 and I would invest it in something where I could learn a skill in to then make more income. Here's an example. I really like photography. What I would do is I would spend, $200 to $400 of that $1,000 that I had to buy like a budget but good camera. And then I would spend the rest of that money on courses or any type of software that I would need to start photography. I would then start selling my photography services. Maybe it's taking photos of products. Maybe it's, taking photos of somebody's special event like a birthday or a wedding. And then start selling these type of services online. You can start really easily on Craigslist or Nextdoor.com, places in your local community where you could start to make some income with the skill that you've just acquired. These days with the internet, there's tons of tutorials online for all different types of skills, and there are a lot of skills that you can learn for under $1,000. Photography was just one of them that I chose because that's what I'm personally interested in. So if you only had $1,000, I'm encouraging you guys to look for things where you can get an immediate return on your money to start making more money so that you can qualify into that second bucket of people, which is you have $1,000 and you have more money coming down the pipeline so that you can start to invest in longer term investments for yourself and for your future. Let's talk about the second situation now, which is you have $1,000, you have more money coming down the pipeline from your future paychecks that you can use to invest in, and you're wondering what to invest in for long-term gains and long-term success. So here are my recommendations for investments from least actively managed, so the most passive, all the way to the most actively managed, so the least passive. So the least active or the most passive investment that you could probably do is using a Roboadvisor. Roboadvisors are digital platforms where you can invest your money and they'll use algorithms to basically trade for you. They'll typically ask you what your risk tolerance is and what your goals are, and they'll choose investments for you in a sophisticated manner. One of the main advantages of using a Roboadvisor is that their fees are really low. Because there's no human actively managing your investments, their management fees are going to be way lower than a typical financial advisor. To give you an idea, the typical fee a financial advisor would probably charge you is 1% for, let's say, $100,000 in your balance. So if you have $100,000 invested, they would charge you 1% a year, which comes out to $1,000 per year. A robo-advisor, on the other hand, has low fees. So Wealthfront, for example, has a 0.25% fee rate on assets under management. The biggest problem I see with newer investors is that they typically fall victim to higher fee products and higher fee managed accounts. Over 20 years, a portfolio with $100,000 in it charged 1% versus 0.25%. That difference is going to be $30,000. And let me pull up a graphic that is straight from the SEC.gov website. While a 1% fee doesn't seem like a lot of money to you right now, over time it actually amounts to quite a bit. As we can see with the graph, $30,000 is the difference in fees from a 1% to a 0.25% management style. So it's important to find places with low fees and low expense ratios. An expense ratio is just the fee that an exchange traded fund or a type of mutual fund would charge their shareholders. Just like when you're choosing an active management style or a passive management style and you're looking at the fee structure, you should also look at the expense ratio for different types of funds. Which brings me to our next point, which is the second investment I would recommend are index funds. Index funds are basically a collection or a basket of stocks put into one investment vehicle. By buying one index fund, what you're doing is you're buying a very small percentage into all the companies that that index fund owns. A popular index fund is the S&P 500 index fund, where you basically buy one fund. You're collectively buying a very small percentage of all the companies in the S&P 500, which offers you a bunch of diversification. Not only are you getting a full exposure to the market, what you're also getting is a dividend yield on that index fund, which is pretty cool. A dividend is just basically a portion of profit that a company makes, and then when they have too much of profit, they'll pass that back to the people that own the shares. So in addition to the change in the stock price of the actual index fund, you'll also be gaining passive income from the dividends themselves. One of the tickers I want to show you guys is SPY, which is the Spider S&P 500 ETF. It has a dividend yield of 1.79%, so for every $1,000 of SPY that you own, you actually get $17.9 back every year. I'm sorry, I shouldn't say you get it back. You get that in addition to just owning the stock and holding it for its value. While $17.9 might not seem like a lot, you're actually just doing nothing for it. So it's actually pretty nice because it's completely passive income as long as you hold that index fund. The S&P 500 has averaged an annual return of about 8% for the past 50 years. It's a pretty great strategy because one, it has low fees, and two, you just buy it and you kind of forget it. Just like in the Roboadvisor case, you're just buying this index fund and you're holding on to it for a very long period of time. In fact, Warren Buffett believes in this strategy so much that a decade ago, he took out $1 million wager against hedge fund traders, saying that his passive index fund would beat out any active hedge fund trader. And guess what? He won. His pick, OEX, actually gained him a 126% gain over the 10 years. The hedge funds, on the other hand, they picked different stocks, but they only averaged about 36% in the same time period. So basically, Warren Buffett did nothing and still beat all these active traders. And if it's good for the best investor of all time, it's probably good enough for you and I. Another thing with exchange traded funds or index funds are you don't have to buy the S&P 500 index fund. You can also just buy, like, for example, a dividend yield ETF, which is just a collection of dividend paying stocks. It's a quick and easy way to access a bunch of dividend stocks all at once. Some examples of dividend ETFs are SPHD and SPHQ. SPHD, for example, has a dividend yield of 3.33%, and SPHQ has a dividend yield of 1.75%. Now, the reason I really suggest index funds over mutual funds is because of the expense ratios. Index funds typically have a very low expense ratio, especially if you get them through, say, Vanguard.com. Mutual funds, on the other hand, can have high expense ratios, which, as we've learned in this video a little bit earlier, that high fees are going to cut into your returns over time. The next investment strategy, which requires a little bit more active work, is just owning dividend paying stocks. I like dividend stocks because, again, they're giving you passive income just for owning them. However, with the dividend stock portfolio, you're going to have to research the dividend stocks yourself, you're going to have to buy them yourself, and then you have to figure out if they're still doing well on their own. Some of the most consistent dividend paying stocks include Coca-Cola, where they have a running 55-year dividend, and AT&T, where they have a really high yield. To buy stocks, I like to suggest using Robinhood because it's really easy to use and it has a really easy interface for beginners. I personally have a little invite code of my own in the description that I'll leave for you guys, but basically if you sign up using my link, you'll get a free stock valued between $2.50 and $200. I personally use Robinhood because it's really easy to use, and also I can see all of my investments in real time and I can buy and sell as I wish. I don't do a lot of day trading, but I do really like the convenience of having it there when I need to. So that's how I would do it if I was investing in stocks. I'm looking at dividend stocks, index funds, or just investing in a robo-advisor. Lastly, the most active investment that you could probably make for yourself is getting a skill or getting a credential for yourself. A lot of times, if you're in a certain profession, you can get a credential outside of work that can help bolster your income during work. For example, let's say you work in the transportation and logistics industry. You can enroll to become a fleet manager. Once you get that certification, which is called, I believe it's called a CAFM, and it costs about $700 to get this certification or to enroll in the course to get the certification. But after you get it, your median income can increase by over $15,000 per year, which is pretty crazy. So I'll link to this article in the description below. Basically, it'll give you some ideas for the best certifications to boost your salary, and hopefully it applies to you. If it doesn't apply to you, hopefully it gives you some ideas about what types of certification and credentials you can start to go after. The last thing I want to say about investing is that it's going to be a lot easier to invest when you're operating from a position of power and a position of savings. If you have enough savings for your personal finances, you're going to be a better investor. The reason is if you have somewhat of a safety net, you can afford to be a little riskier with your investments, and it's going to cause you less financial stress when you're making these investment decisions. Plus, it's going to be really fun when you start to see some money rolling in, and all of a sudden, if you can scale your capital from, let's say, $1,000 to $10,000 to invest in, just the gains are going to be that much better. So that's it, guys. Those are my recommendations for what I would do with $1,000. I hope that they were helpful. I'll leave all the relevant resources for you guys in the description below. As always, if you enjoyed this content, make sure to subscribe and like to my channel. I am a new YouTuber, so every like helps the YouTube algorithm out. You can follow me on TikTok at Humphrey Talks, or you can follow me on Instagram at HumphreyLOL. I've been trying to post there more lately, so if you follow there and drop me a comment, that'd be great. Let me know in the comments if this video helped you or not, and I'll see you in the next one. See ya.